Now, I do just want to make very few comments on shadow banking. And the very term itself, shadow banking, gives this feeling that there's something evil and mysterious about it. But actually, it's a very good thing. In my view, I'm a big fan of shadow banking. The fact is, we cannot expect the banking system, the conventional banking system, to do all the financing needed for the European economy over the years to come if they've got to have these new levels of capital and liquidity and safe assets and pay into resolution funds, deposit guarantee funds, etc., etc. It can't all be done. So we do need market finance from, well, I'm not going to use the word shadow banks, but from institutions who do undertake maturity transformations, liquidity transformations, do offer deposit-like functions, instruments, which have to be capital certain. Citizens want that. Though I think the big task for the next decade, 5 years to decade, is to encourage citizens to realize that they're going to have to take risk. Liquidity risk on the one hand, and if they want a reasonable return, they're going to have to take credit risk. And when that happens, as it will do, when that risk crystallizes from time to time, they cannot turn around and say, I was missold. Life isn't like that. Society has got to come to grips with the fact that you can't have everything totally safe and also the people, the institutions doing it take risks. This is what shadow banking is about. So we need more. We need more of it. And today, as I said, we've had the Liikanen proposal, as it were, out. Liikanen very light, it seemed to me. More like Volcker rule came out. And of course, the repo proposal. Now, when it comes to money market funds, I would just like to say I should declare an interest here. I'm part of the Commission's expert group on debt redemption funds and Eurobills. We will report on schedule at the end of March. My proposal is for a temporary Eurobill fund, pro rata guaranteed by the governments. And frankly, when that sort of thing exists, there will be a lot less need for money market funds. So I make that comment. I may get shouted at in a moment, but I should declare it. The fact is, something like that will be capital certain. There will, of course, be liquidity risks, well, not liquidity, but marketability risks and interest rate risk. But something new could come up, which could be very interesting. We need to understand how money market funds could deal with that. The fact is, the banking system now seems much more certain. We've got the AQR coming up. If capital is required, we haven't got time to wait for all these SRMs and all the rest of it, deposit guarantee, single resolution funds, etc. The time when there will be problems will be in the next year. By the time the ECB announces the results of the AQR, banks that need it will have had to have raised capital. That's when governments may have to do something, not 5 years' time. So the crisis, if there is one, is at hand. I'm actually quite optimistic. I look at the share prices of the major European banks, which are up 80% since the middle of 12, when Mario Draghi said, we'll do whatever it takes. 80% up. So shareholders, bank shareholders, are not expecting the AQR to delete them, to take away their assets, clearly. We've got the Bank Recovery and Resolution Directive and so forth, the bailing in proposals. Bank shareholders are clearly not expecting a big hit. There will be some, of course, but for the aggregate, I travel very hopefully.